Hey everybody, I hope you're doing great. I'm Jacob, and in this video, I'm going to share my dividend income for October in 2023. If you don't know, I share my dividend income every single month for this portfolio, really in an effort to give you complete transparency into what investing is actually like, especially from an investor like myself who holds primarily dividend-paying companies. I guess you could consider them more boring companies. The growth isn't going to wow you. You're not going to get exponential returns overnight like a lot of the TikTokers say. But overall, this is a long-term strategy and a goal to achieve financial independence. And ultimately, I hope that it inspires you to get started on your journey if you haven't already. So looking at the overall value of the portfolio so far, the value is right around $31,200, which puts us at a gain of $6,200 or a return of about 38%. And here in M1 Finance, you can see the breakdown. So from capital gains, we have roughly $3,900, and just from dividends alone, sitting just shy of $2,400. And checking the portfolio out over the past month, it started out not bad, and then it got pretty rough towards the end of October. And then the past couple days, the market performed quite well, which resulted in us having a gain of just over 3% on the month. So if it wasn't for the past couple days bailing me out, I think we would definitely be sitting in the red. And just to look at some of the sectors that I hold, the gain for this month was in that 2 to 6% range, healthcare being 2%, and we also had some 6%ers like real estate, your pretty standard REITs like Realty Income Corp, Stag, and National Retail Property. Those seem to perform quite well. And one thing I also like to look at are the ETFs. How do they perform? This is what I consider my benchmark because they do follow the market fairly closely. So something like VTI, for example, I think that's a very good market indicator because it has a lot of small caps, medium caps, and large cap companies. And that was around 3% this month. So for the most part, how I judge my portfolio is I use this 3% as the baseline. Anything above that, generally, it outperformed the market, and anything below that was an underperformer. But with that said, let's hop into the dividends here and let's see what we got for this month. So to kick us off, we got $6.20 from Brookfield Infrastructure Partners. Now, a lot of you may be unfamiliar with this company. It is a REIT, and their primary focus is infrastructure-related investments. So you can think of things like transportation, data centers, utilities, midstream gas. They also have a lot of real estate properties as well, so a pretty wide portfolio, but again, a bigger focus on those infrastructure-related things. A little bit different than your standard REITs like Realty Income Corp, for example. Next up, we got $7.65 from Genuine Parts Company, and this is a company that I've really enjoyed having in my portfolio over the past couple of years. Adds a nice level of diversification because I don't really have any other companies like this. This company in particular is a distributor of various automotive parts, which of course is a very necessary business in today's world. And coming up after that is Nike. They paid 88 cents this month. Following that, we got $3.74 from Coca-Cola, a company that, yes, I will agree is very boring. You're not going to see them have exponential growth. They're a pretty slow and steady company as far as their stock price is concerned, but they have a pretty good foothold in the soft drink market. It's basically Coca-Cola and Pepsi. It seems like they're always just kind of going back and forth for market share, but overall a pretty slow, steady, and boring company, which I like. Vici Properties is next. They paid $10.11, and this is another REIT that I enjoy having in my portfolio, primarily because of the diversification factor. Now, Vici has a lot of gaming properties all across the United States. They own a lot of properties on the Las Vegas Strip especially, which again is just such a unique area of the world. A lot of people come and visit from all over. A lot of revenue is generated. And overall, Vici has performed okay. Nothing spectacular, but just okay. After that is a company that a lot of you are probably pretty familiar with, especially if you're a dividend investor yourself. But this is a monthly paying real estate investment trust known as Realty Income Corp. Basically, if you're not familiar, they own a lot of commercial real estate, a lot of businesses that you're probably familiar with, like CVS, Walgreens, LA Fitness, and essentially they just collect rent from those businesses. And coming up next is Stag Industrial. This is another monthly paying real estate investment trust. Their focus is on industrial properties, so primarily warehouses, but this month they paid $2.65. After that is DTE Energy, $2.72. And energy companies, they're pretty much the definition of not exciting. You're not going to see any crazy returns. You're just going to see slow and steady. And when you compare utility companies to the market in terms of how much it fluctuates, it tends to fluctuate less than the actual market. And this is from something called the beta coefficient. So the market, the S&P 500, has a beta coefficient of 1. So anything below that, it's going to move less from a price perspective. And generally, utility companies, they have a coefficient of really anywhere between 0.8 to 1. So not a lot of excitement. Coming up next is SPHD. This is a monthly paying ETF. And this one is comprised more of high dividend paying companies on the S&P 500 that generally have lower volatility. This month they paid $8.90. And to be honest with you, this ETF in particular really hasn't had the best capital gains, especially when you compare it to something like VTI or SCHD, another popular ETF. So if you're looking into different ETFs, you can give this one a look, but certainly do your own research, do the comparison between this and something like VTI or SCHD. Personally, I'm probably going to hold off investing more into this one. I'll probably just kind of do a wait and hold thing. Cisco Corp, this is the food distribution company. They paid $4.31. Last but not least is JP Morgan, one of the largest banks in the United States, and they paid $5.83. So when we add everything up and put that into our dividend tracking spreadsheet, for this month we got paid $59.08. Which, by the way, if you do want this dividend income tracking spreadsheet to input your own numbers, I'll put a link in the description below. All you have to do is click File and then click that Make a Copy, and then it'll allow you to put a copy in your own Google Drive. But overall, $59, nothing overly crazy. Compared to this time last year, we were at $45, so roughly a $14 gain from last year. And from last quarter, month number 1, $51, so about an $8 increase. I haven't invested as much as I would like to in this portfolio, just because I'm getting married, so I'm kind of saving up for that. But I did update the yearly wage number, and last month we had about $915 every year from dividend income, and with this month we jump up to $947, and that puts our hourly wage, this is for every single day of the year, at 11 cents. So that's pretty cool to see, 11 cents just from this dividend income. And yes, I know, I get it. It's not a lot, but with the power of compound interest over time, this is going to look really cool. And it's just motivating to see. Anyway, that's going to wrap up the video. Thank you all so much for taking the time to check it out. Let me know down in the comments how much dividend income you earned this month. And if you enjoyed the video, please hit that like button and also consider subscribing if you want more content like this. See you guys in the next one.